What's up everybody? In today's video, we're going to be going over the fourth company on my watch list. These are all companies that I have thoroughly investigated and determined to be great companies that I'd eventually like to own. The only problem is that they are too pricey for my liking at the moment. So what I do is I place them on a watch list and patiently wait for a better opportunity to buy them at a more reasonable price. Because there are 8 of them and the full video is going to be longer than most of you would like, I broke them up into shorter videos on each stock. You'll be able to find all the individual videos by following the link to the playlist right up here. You can also click on the thumbnails at the end of each video and it will take you to the next stock on my watch list. So without further ado, let's get started. Next, we have Fortinet, ticker FTNT. Fortinet is a global leader in security-driven networking products and cybersecurity solutions such as next-generation firewalls, software-defined wide-area networking, and threat vulnerability management, to name a few. About 2/3 of their sales are subscription services, which tend to be more sticky than their product sales. They compete with the likes of Cisco, CrowdStrike, Zscaler, and Palo Alto networks, and they've built a wide moat based on switching costs and a network effect, both of which reinforce the other. Fortinet offers a comprehensive networking and cybersecurity solution that, once installed, touches many points throughout a company. It requires significant amounts of training and would be costly and temporarily increase a company's vulnerability to cyber attacks if they were to move away from Fortinet. And during the time that a company uses Fortinet products, their platform is collecting massive amounts of data about the company's network and the threats that it faces. This data is used to uncover new threats that is then used to update its entire customer base's security situation. As the data pours in and the platform is continuously updated, it becomes better at detecting and guarding against threats, which in turn attracts more customers due to superior product, which results in even more data being collected and integrated into the solutions, thereby increasing the cost of moving to a competitor. You get this self-reinforcing loop of data leading to a network effect, which increases the cost of using a competitor and attracts new competitors, which further increases the switching costs, which leads to an even stronger network effect, and so on. Their financials look fantastic, with revenues and free cash flow growing like gangbusters in the 20 to 25% range, earnings growing over 30% per year over the past 5 years, and they're highly profitable with a baseline return on invested capital around 20% and a net margin of 17 to 18%. And best of all, their profitability has been expanding over the past 5 years. You'll notice this V pattern in their earnings and profitability metrics. Early on in their existence, they relied more heavily on the sale of physical products with a perpetual license rather than subscription-based offerings. The growth in their operating expenses was exceeding the revenue growth, leading to declining profitability. In the 2011-2012 period, they switched to a subscription model. This drop in earnings and profitability was the period in which they were working through the transition to a subscription-based model. This drop in profitability is common when making this switch. You can see a similar pattern in Adobe's and Microsoft's financials as they move to a subscription-based service as well. The main warts on Fortinet is that they are on the expensive side and their shareholder returns are subpar at best. They sport a 33 forward PE, 11 times sales, and a measly 2.3% free cash flow yield. They don't pay a dividend, but they have begun to buy back around 2% of shares outstanding over the past 5 years. This is still a very young company. It was incorporated in 2000 and is still growing very rapidly, especially after its move to a subscription-based model. Given their insane growth rate, management has decided that the best use of their money is to plow it back into the business to grow even further. So far, it's working and investors are willing to pay a premium to hold their shares. Morningstar values them at $77 per share, while CFRA puts a $65 fair value estimate on them, and I value them at $76 per share, but with the 20% margin of safety, I'm only willing to pay $61. Well, that will do it. I'd love to hear your thoughts on Fortinet in the comments. Are you a buyer or a seller? If there are any other companies you'd like me to take a look at, feel free to leave them in the comments as well, and I'll eventually get around to them. Also, please make sure you like this video and subscribe to my channel so you don't miss any videos when I release them. It's a quick and free way you can help me grow this channel if you find this content valuable. Lastly, to continue to the next great company on my watch list, click one of the thumbnails that you see on your screen right now. Until next time, you all take care. I'll see you in the next one.